big economic breakdown earlier this week left us with mortgage rates lower than we've seen in over a year. Rebounded a little bit, but the trend is in. The rates are on the way down. Elections approaching. It's going to be a very interesting end of this year, beginning of next year. We're going to break down all the numbers and, more importantly, tell you if you're looking to buy, there are going to be some very, very unique opportunities for you to buy and get a good deal. Take advantage of the market because the market's definitely changing. That's where the gold is if you're looking for a deal. How are we doing today? This is Steve, real estate agent, Malone Home Team EXP in the North Atlanta area. Appreciate your time. If you would not mind liking and subscribing to the video, that helps us out, getting the word out, what's going on in the market, because the market changes a lot. Mortgage rates change, what's going on with prices changes, what's going on with strategy changes for all of our people. So if you would not mind, again, liking and subscribing, that just helps us to get out there and get our information out there to all the people. And I appreciate it. Seriously. All right, there you go. All right, let's talk about mortgage rates because that's the big thing everybody's talking about. It's been a crazy week, all right? We had that big economic crazy day on Monday. Been a little bit of a return over the last couple of days, economic-wise, whether it's through the markets or through the mortgage rates, things like that. For a brief moment in time, the mortgage rates got down to around 6.35-ish. They've come up a little bit, which is not surprising. 6.35 was very much a knee-jerk reaction, just like everything else that happened on Monday was a knee-jerk reaction what happened in the market. Now, we've come back to kind of where we're supposed to be. We're around 6.6. You asked me a month ago if we were at 6.6 on this day, would I be happy? I would be thrilled. All right, we'll take it. All right, the question becomes, what happens next? Because mortgage rates are on the way down. Are they on the way down as fast as everybody thinks that they are? Will there be a bottom where they don't go anymore? Will they keep rolling? What's driving it? All that stuff. So we're going to do a deep dive on the numbers. All right. So I'll try not to be too nerdy in this. I get bogged down in numbers sometimes, but the numbers don't lie. All right. They're there. They're the facts. It is what it is. So the numbers don't lie. So we're going to break down the numbers. And then what we're going to do is we're going to talk about strategy. All right, because there's an obvious path forward going forward, all right, throughout the rest of this year, having to do with not only rates, seasonal changes in real estate, and the election. Okay, so looking forward, I've got some ideas for my people. There's also the big changes coming along due to the big NAR lawsuit thing. The way that we do real estate is going to change too. So we're going to take advantage of that as well. So we're going to look at the stats, kind of think about what's going to happen, and then on the backside of that, we're going to talk about buying and selling strategies going forward. But first, let's go deep in the numbers. So it has been a little bit of a crazy month in real estate. The rates are the big story, but let's walk us through kind of all the things that we've noticed. These are the numbers. We always do this. The numbers, and I don't want to get bogged down on this because there's really not a whole lot in this, but there is something worth noting, okay? In the numbers from what we've seen, this is July going into August, okay? Median sales price down a little bit. Not unusual from June to July. Did the same thing last year. We've seen it in the past too. It just means we're getting towards the end of summer. Sometimes you see that median sales price come down a little bit. Important thing to notice is median sale price, $435. July of 23, it was $430. So it's up. That's where we want to be. Just keep going up, all right? The number of new listings, not as many last month. Again, not unusual. The important thing that we want to watch is this number right here, months of supply. We say it all the time, months of supply. If we stopped adding houses, we sold everything at the pace that we're selling everything, how long would it take to sell everything? 3.6 months now. It was 3.4, which is pretty high. 3.6 months of inventory. Still technically a seller's market, but we're going to go back. That 3.6 number, we got to go all the way back to October of 2015. That was the last time. So almost 9 years since we've seen this number of houses on the market, okay? Everything else is pretty solid, okay, as far as price per square foot, shows per listing, all that stuff. There's really nothing like alarming in that. That's just, and this isn't really even alarming. I mean, let's bring it back to, because when you look at it like this, it's like, holy cow, there's a whole lot of houses now. When you look at, the whole length, there's really, I mean, once you get through the pandemic, I mean, the pandemic was super low, then it comes back up 3.6. That's kind of where we were, a little bit higher than where we were back in 19 to 17, whatever. So again, you got to go all the way back to 2015. Okay, so we're not panicking yet. I mean, this is kind of where you want to be. It's a seller's market, but it's not a crazy market. Which it's a healthy market. I kind of like it. You know, if you're selling, you have a really nice house, price it right, looks the part, you're going to sell and get a decent amount. Are you going to get 5,000 offers on it? Probably not. If you're buying, can you get an inspection? Probably. That's a good thing. I mean, we're not supposed to. We're supposed to root for our sellers, or we're supposed to root for our buyers. I want the best for them, right? But when you look at the market on the whole, what do I want? What do I want to see as an observer watching just the market? I want a situation where home prices are going up because I believe in the value of home ownership. Home prices going up. I want the buyers to get a really solid property that they've had looked at, inspected, and everything, and have asked for fixes. I want the seller to help them out, and I want the seller to make money. Okay, sellers owned it; they should make money. The buyer likes it; they should have it looked at and fixed. Okay, I want all those things to happen. And for a while, people weren't getting inspections just because it was crazy. All right, so there you go. There's a market in a nutshell. All right, the month supply's up a little bit. We ain't gonna panic. All right, this is the story. Mortgage rates. All right, this is over the last year. Remember, man, back in October, we were over at 8%, and we had a big drop, like right around Christmas time. Felt like Christmas with the rates where they were. Then they kind of came back up a little bit. They came all the way back up to 7.5, and they've been on the way down ever since. Now, this past Monday, everybody kind of tripped out. We went crazy on Monday. We're going to show you why here in just a second. And they've come back a little bit, back to probably where they should be. They should be somewhere in this 6.6 to 6.7 range. You can kind of see this kind of imaginary line. They should be in here. They've been 7.5, and they've been steadily coming down from there. It should be in this area right here. I mean, we'll get back down to this number at some point, but probably not ready yet. That was a knee-jerk reaction to what happened in the market. Okay, but right now, 6.63, that's where we are. That's as of Thursday, August 8th, 2024. All right, why do we have this little wacky drop right here? This is one of the big reasons why. This was the news on Friday. The jobs report on Friday was just, it was bad. You can't really like dress it up any nicer than that. Way below where they thought it was going to be. Not only was this number way below where it was, but they also dropped. They did some revisions backwards. 5 of the last 6 months had their numbers dropped too. It was bad. It was a bad report, and everybody freaked out. Like, holy crap! Here goes the whole economy and everything like that. So Friday we started to see some ticks downward in the market. And you remember Monday was just a bloodbath in all the markets. They've since come back because that was very much a knee-jerk reaction. Okay, and a lot of the people that were watching it in charge, and I've got an investing buddy, who a financial guy, and I'll give him a shout out, Mr. Steve. Steve and Julian, he's in my networking group, and he basically told all those people this is coming, and it came, and then there you go. So it happens, all right. But we bounced back. But that being said, this shows that there's a little bit of, the economy is not quite as strong as expected. Now today, a little bit of good news on the economy front. Weekless job claims fall to 233K, less than expected. It's a positive sign for the labor market. Is it enough to bring mortgage rates way up? No, but they brought them up. Now we're on that 6.6 range. Okay, so we've gotten over that knee-jerk reaction, back up to 6.6, kind of where we expected to be. All right, now the question becomes, what happens going forward? All right, let's look at the Fed Watch tool. I use this all the time. I watch this. Dan Frio, if you really want to keep up with this, he's got a great YouTube channel. I'll put a link below for Dan Frio. Shouts out to you, Dan. He does a really good thing, and he shows this all the time. This is from Chicago Mercantile Exchange Group. They've got this thing called the Fed Watch tool. Okay, so what is going to happen at the next meeting for the Fed? September 18th. Currently, the Fed's rate is 525 to 550. As of this moment, 44% chance they're going to drop it a quarter point, 55.5% chance they're going to drop it 2/4 of a point. Now, interesting to note that when you do the comparison thing, a couple days ago, this number was way up, and actually on Monday, this number was like 90% likely that they were going to do a half point drop. They've calmed down a little bit. Again, knee jerk reaction drove everything on Monday, but it does show the likelihood. I mean, the reality of the situation is we're going to, no matter how you slice it, we're going to have a drop. The question becomes, are we going to have just the one drop, like a quarter point drop, or we're going to have a half point drop? Then we'll go into November, and now it's like 52.4% that we're going to go down to 450, 475. So that's the next one down. Okay, so that's like right after the election. That's the play, is that they're going to do that. And then so that's another quarter point. So now you're looking at 3/4 of a point from where we are right now. And then once you go into December, it's a 48% chance that we'll go to 425 to 450. So that's a full point. So 4 quarter point drops basically between now and the end of the year. Okay. And then I'm going to look at the probabilities chart to show you what's going to happen. These blue lines, that's the most likely. So again, September, we're going to go down 2 quarters or a half, then 1, 1, 1, 1, all the way through March, then another 1, 1 through July. These numbers are going to change. Okay. But that's the trend. Okay. The trend is, it's funny because this is kind of what everybody was thinking at the beginning of the year, was that we're going to have 4 to 6 drops through the year. The economy held tight. We didn't get drops. And then towards the end, it started faltering. Now we're going to get the 4 drops like last minute, whatever. It hung in there. So that being said, what does that mean for that versus the rates, for the mortgage rates? Okay. And let me put it back to here because I don't want to confuse too much. All right. So again, go back to this number right here, September 18th, 44.5% chance that the Feds are going to drop their rate, quarter point, 55.5% chance they're going to drop it a half point. What does that mean to you if you're looking at mortgage rates? Mortgage rates are not driven by what the Feds do, okay? And a lot of people mistake that. What the Feds do, though, is they watch the economy and they make moves based on what the economy is doing. So if they're looking at it saying, we're going to do a drop, I just don't know if I want to do like a small drop or a big drop, that's them looking at the economy saying, we may have to do a small drop or a big drop. There's a 0% chance they're going to leave it where it is. You're going to have a drop, right? That's what they're looking at. They're looking at the economy. Now, the mortgage rates are driven off of what's going on in the economy, okay? Now, the Feds, by doing this, will start to allow a little bit, take some pressure off of what they've done to the economy, allow the rates to breathe a little bit, their interest rates, the rates that banks lend money to each other, the rates that you pay for like car notes and credit cards and things like that. So you'll have the opportunity to have better rates, okay? And that's going to help to shore up the economy a little bit. Now, the mortgage rates, again, they're going to parallel. They don't run in tandem with, because the mortgage rates do this. You just saw the map, right? You just saw what they do every day. They go blah, 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 blah. The Fed funds rate's been pretty steady, okay? So they don't drive the mortgage rates, but they're going to run in tandem. Okay, so as we look at one last time, this chart, not that chart, this chart, the probabilities chart. Come on. There it is. So look at the probabilities chart and you see that trend downwards. Guess what's going to happen with mortgage rates? We're going to have that trend downwards. Now, here's the deal. We are not going to have a major drop in rates. I think we're going to end up, the bottom's going to be somewhere in the 5s, maybe mid to upper 5s is where I think it's going to be. Now, let's look forward, okay? I want to show you a couple things because a lot of people are starting to freak out about the elections. What's going to happen after the election? What's going to happen after the election, okay? About mortgage rates. Mortgage rates have decreased leading up to 8 of the last 11 presidential elections, all right? We had a big jump up in 80, a little bit in 92, a little bit in 16. But outside of those, you've had a drop. 1% 84. And all these, looks like you're talking about from July to November. November, I think we're going to be like 6.3-ish, 6.25-ish, maybe. So you're talking about maybe a 0.75%. That's a pretty big drop compared to some of these other ones. So you can be cynical if you want. I'm the king of cynicism sometimes. You're gonna have a continued drop going into the election. Okay. The other thing I want to show you is people wonder what's going to happen with home sales because home sales tend to slow down going into the election. Probably, I would say by October 1st, maybe we'll call it September 15th. September 15th, things are going to slow down. October could be a very quiet month because a lot of people are just unsure what's going to happen. Now, whoever your guy or girl is running for election, okay, whoever wins, if you're looking to buy a house, more than likely you're still going to buy a house after your girl or guy wins the election, right? So I've never understood because I've been in sales for a while. Even before I was in real estate, I did advertising sales, and even our advertisers would hold because they didn't know if who would win the election. It's like you have to buy advertising. You're gonna call me like the Friday afterwards and say, all right, let's do it, and you're gonna do the same thing no matter who won. But everybody just gets freaked out by the election. I'm not knocking it. I mean, it is what it is. I mean, it's human psychology, but people are going to be freaked out. So it's going to be quiet through October. Then the election happens. These are the number of home sales after the 9 of the last 11 years after the election. Okay. We had a couple years where they're down 80 and 88. Look at the rest of them. Up. Massive numbers. Look at that. 2005, 7 million homes sold in the country after that election. That's 6 million in 21. And nationally, we had about like 4.8, 4.9, something like that last year. It was a small number. And I think we're going to be somewhere close to that this year. We're going to have a bump next year with the rates coming down, and you have a bump after the election because everybody's kind of like, nobody's freaked out about anything. So I think that helps. The other cool thing is existing home prices went up after 7 of the last 8 elections. Okay, look at these numbers. 92, 105 to 109, 96, 122 to 129. You can read the numbers yourselves. There's the 1 year where the numbers, they went down. And as you know, it was the 08-09 craziness. Okay, it was the recession we had, the economic meltdown, we'll call it. And it was based on what was going on in the world of real estate. That's what happened. So you can almost take that one out. All the other times, and there's really no financial triggers, or there's nothing looking right now like that's what's going to happen going forward for us. It doesn't look like we're going to have to worry about that. It looks like we're going to have another year where the prices next year are going to be higher than this year. Okay, so we talked about the mortgage rates. We talked about where we are. We talked about what's driving everything. We talked about what's going to happen next because I really think by the end of this year we're going to be somewhere, probably low sixes ish, right? Probably mid to upper fives next year by the time we get to spring or summer. I really don't know how much further below that we go. Right? I think it's kind of where we bottom out. Right? That these historically they're not bad rates, and the reason we had the crazy rates is because all heck broke loose during COVID. Right? That's why we had rates of 2 and 3%. That's why everybody refied. I refied. Right? I refied at 3. I'm not going anywhere. You couldn't pay me enough zeros on a check to get me out of my house. But that being said, that's where we are right now. Now, if you're buying or selling, it's strategy time. How do we take advantage of this? Selling is pretty easy, but the buying is much more interesting. So let's break it down. What do you do if you're looking to make a move? Let's start first. Let's start if you're selling. We always start with buyers. Let's start with sellers because there are going to be some things that are different. Sellers, it's the same as it's been. Let's get your house staged. Get your house cleaned, get your house thinned out a little bit, declutter, depersonalize, make it sing and dance. Price it right. We need to price it right. Okay. The days of trying to reach to see what can we get, those days are kind of over. Okay. The market will let us know where we are with price. Okay. If I come in and we look at everything going and we say, let's say 400. And you want to try for 425, and everything else kind of looks like it's 400, maybe we could stretch to 410, maybe like 415, maybe. But to go way stretch in this market is probably not going to happen. All right, not until the rates get a lot further down. I really think next spring's going to be a little crazy. I think things are going to really pick up next spring. Okay. So to me, if you have to sell now, that's what I do. Really mind that price. And the reality is, if whatever the magic number is, if the magic number is, let's say it's 415 and we want to try for 425. I would much rather go 400. Go 400. It's a deal. Everybody knows it's a deal, and you're going to get multiple offers on it. And those offers are going to push it up to 410, 415. We've seen it. We just sold something in Suwannee where that price was 550. We could have stretched the price a little bit. We left it at 550, and we got something around 580. Okay, so if you want to stretch, that's the way to stretch. Find the market price it just a hair under it, and then just let the market do what the market does. Let the market show you where the price is. Okay, so that's what I do if I'm selling. The other thing is, it's going to be very interesting if you're selling going forward because there are new rules. Okay, the new rule states that basically we have like a split commission now, or split compensation, I should say, for agents. Okay, the seller is now going to pay the listing agent X, and then the seller is going to offer the buyer's agent X if they want to, okay, or Y if they want to, okay. We always suggest that you offer something. But the other thing is, right now, when this launches, it's going to be interesting to see how this works. We can't advertise anymore how much is being offered. So you could offer Y, but there's a chance that the buyer's agent may have negotiated with their person, which buyer's agent should and will, how much am I going to get paid? It could be less than Y. And if it's less than Y, there's no reason to pay them Y when they're willing to take less than Y. So there are going to be a lot of things to watch on how the new world runs with listing agreements and things like that. So that's something to keep in mind. And we're going to be watching. We're going to be updating. This is how we're doing it. But we are really leaning into this with our team. Okay, we are really leaning into these changes. Okay, we're not going to sit back and say, I wonder how it's all going to work out. We kind of want to be on the forefront. We want to be on the front lines, helping to figure out what's the best strategy going forward for our sellers. And for the buyers, there's different strategies. But for selling, that's what I want you to do. Price it right, make it look good, stage it like crazy, don't overprice it. We're going to rock and roll and get your house sold. All right, that's for sellers. And I don't care when it is. If it's listed right, looks great, right area, you're going to sell. It just depends on how many buyers you're going to get. There are times that are better to buy or sell than others. I think September is a really good month. I think November may be a good month after the election. October could be quiet. December's usually quiet. And I think right after New Year's, we're going to be running and gunning right after New Year's. So that's my plan if you're selling. If you're buying, we're going to flip that script. Okay? The thing to keep in mind is every 1% that interest rates go down, 5 million more buyers jump into the market across the country, okay, for every 1%. And we were at 7.5% just a couple months ago, back in April. We're 6.6%. We're pretty close to 6.5. We're about 1% down. So that's how many more buyers are back. And we could end up somewhere in the mid-5s next year. And you have those buyers back, okay? Yes, I want to buy a house with a smaller rate or with a lower rate. Okay, but you got to keep in mind, the houses are going to be more expensive. They're going to be more expensive this time next year than they are right now. There are no market forces doing the opposite here in Atlanta. Okay, so what I want you to do is I want you to think about, talk to your lender. Don't assume the drop, but you may want to think about grabbing now and then refinancing when the rates go down, because you're going to get the house cheaper. Because if you bought today, the higher rate, and then refied, that's going to be a much better rate, better payment than what if I just wait till it gets to 5.5 and then buy. Wait till it's 5.5. There's going to be a whole bunch of people out there. Home prices will be up, and you're going to have more people bidding. That's going to push the price even higher. Okay, so by the time you do that, you do the new, payment and whatever. That payment may end up being what the payment would have been right now. But the difference is the payment that you have right now. If you refi in a year, you're going to refi the cheaper house and have even lower payment. All right, so that's the plan. Right? And less competition, all that stuff. Months to watch, exact opposite of what I just said. I think September is going to be a little crazy. I think August, usually middle part of August. This is August 8th. If you want to get a deal on a house, it's time to rock and roll. You got 2 weeks. Then when you get into the Labor Day market through the end of September, I think you're going to have more buyers popping back in, low rates. I think October is going to be crazy because everybody's going to be kind of holding their breath going in the election. We talked about it in the last section about like everybody just holds their breath and doesn't know what they want to do. And it's human nature, and I'm not knocking anybody for it. I think it's interesting, but I'm not knocking anybody for it. If you're buying, take advantage of it. That's all I'm saying. You're going to buy a house regardless. All these buyers are sitting on the sidelines wondering what's going to happen. You can swoop in, get a great deal on a house in October with rates not bad, because we showed you earlier too that the rates are going to continue going down. Okay, or December is a good month because it's the month of Christmas, holiday parties, end of the year, going to grandma's house, all that stuff happens in December. A lot of buyers are not there, so December might be a great month too. If you're waiting until March to go out there and find a house, you're going to find a lot more competition and a lot higher prices on houses. Okay, so there you have it. Now, the other thing that you want to do is if you're a buyer, and we'll do a video on this next. We'll do this video next week talking about the changes, because the big change, two big changes. Number one, you can't see a house without signing something with a realtor. You have to be contractually signed with somebody to go just look at a house. Okay, that's a new thing. That's what the Department of Justice wants. They want buyers to be represented by somebody to see, just to even see the house. Okay, so if you call somebody on a website and whatever, you're gonna have to sign something with them to see the house, unless you go to an open house. All right, so that's number one. Number two, you're gonna have to talk to that agent about compensation, because there are gonna be some listings that aren't offering compensation. You're gonna have to work out, how am I gonna pay this guy, or how am I gonna pay this girl if they help me out, right? Are you gonna rework the price? Are we gonna bring cash to the table? All these things we're gonna have to work through. Okay, as we talked about, we're gonna be on the forefront of this. Okay, we're gonna be on the leading edge. All right, I don't want to be 6 months or 12 months down the road figuring out, all right, what's the best way to do this? I mean, I want to be on the front lines, learning as fast as we can to take care of our people, because I want my buyers to get the best deals possible, and I want my sellers to get the best deals possible. So there you go. That's what we do. Don't forget to like. Don't forget to subscribe. And if you have any questions at all, emails below, and you can also call us at 470-233-4409. There you have it. Let's see what happens at the end of this year. Going to be interesting to watch. This is Steve, Malone Home Team EXP. I appreciate your time. Take care. Bye.